Hi, everybody. Welcome to another edition of Know Before You Owe. I'm here with Matt Coles, and Matt and I go back. We first met at a 49er game. I think it was a win for the Niners, if I recall.
Yeah.
And now we're talking about mortgages today, and you are with First Funding, a really solid company that has been around for a long time. Can you share what you're up to nowadays, Matt? Give us a little insight to First Funding.
Yeah, absolutely. And I know, I don't know when this is going to get put out into production, but the fact of the matter is that it's the Friday before the full slate of football games start, and it's always an exciting time of the year. So, well, first of all, thank you for the opportunity to share a little bit about First Funding. I joined First Funding about a year and a half ago. So I kind of come from a little bit of a different perspective. And when I joined First Funding, I obviously knew the leadership over here, and I knew a lot about what they were known for. And it's interesting now that I look back to where I started January of 2024, and I still, First Funding has done such a great job of being that broker to banker, kind of like the warehouse lending, warehouse lending on training wheels, essentially, right? That's what they kind of made. That was their bread and butter for a long time. Well, I got to be honest, like now that I'm over here and I start to see the growth of what it looks like for someone to go from a $5 million non-Dell line to a $25 million non-Dell line to a $50 million delegated line. And now we have some delegated people that are growing into the TPO space. I mean, it's really exciting on this side to talk about what that looks like and how we can serve that full gamut of what you want to do, right? And it's been pretty cool to see, because before I joined, I didn't know that that's what they were. And I'm still we still go out and we still service that broker to banker. It's still our passion. It's still our bread and butter, but we're starting to see some real growth in a lot of our lenders. And so it's been pretty awesome to see on this side of it.
So for our audience who might not know what Dell means or correspondent means, if you look at it from the most simple example, I am a mortgage broker, which means I have the ability to work with 100 different lenders. The next step up from being a broker, which means I am not underwriting and funding the loan, I'm having a lender partner do that, would be to then do it myself or do it in some hybrid model. Maybe I'm underwriting the file. Maybe I'm having someone else fund the loan. Maybe I'm doing the underwriting and funding the loan. Or maybe I'm just funding the loan, which sounds kind of crazy. That takes you from being a broker to a banker or correspondent lender. And then you can get your full delegation, your full DE underwrite, and become basically like a large mortgage company bank, right? Those are kind of the levels of this. And it's awesome to see your example of going from $5 million to $10 million to $25 and $50 million with some of those smaller companies like myself that have captured a lot of that business away from the larger, more archaic or old school ways of doing mortgages. We know that the market's moving so quickly. With your company, First Funding, it's so nice to see that you're able to help accelerate that growth to those partners that need it most, which is awesome.
Yeah, what we look at is really what we're seeing is a lot of people came in, they wanted to start their own shop, but they wanted to crawl before they ran, right? Which is great. We love that. Being in the warehouse facility space, we are risk adverse, right? So we try to mitigate all our risk all over the place. And with the tools and the technology that's out there and the talent, a lot of talented people in our industry joining forces, coming together and saying, you know what, we're ready to take that next step. And that next step, it's kind of scary, right? Hey, I'm going to not do the underwriting on a file. And then all of a sudden you're taking on that risk of the credit underwriting, right? And a lot can go sideways there. But what we're seeing is some real success in that, right? We're seeing the technology and the ability for people to go and make that move is starting to accelerate a little bit quicker. And people are reinvesting in their companies and doing great things.
That's huge. And again, this is so people know what warehousing means is Bank of Jim Black. If I had a line of credit, I would be able to fund that loan at whatever point that meets the guidelines for the loan, the approval stages, which gets the loan done faster. So my speed to convert or produce is faster, which means my cost of carrying a loan lock or hedging my cost can go lower, and I can offer better products, better services, as long as at the end, I get that loan off of my line or my warehouse line, right? Because there's a cost to borrow. There's a cost to borrow as a lender. It sounds kind of like a dual word, but it really means that I'm borrowing to fund a loan, and then I'm paying off my warehouse line when I sell that loan to a servicer, which is the person who manages those payments for the life of the loan for the borrower and the institution or investor.
Yeah,
Pretty cool.
It's great to hear someone else explain it, because when I go to barbecues, people ask me what I do, and I go, I am a credit card for a mortgage lender. They're like, well, why right? And they go, well, why does a mortgage company need a credit card? I said, well, you can look at it one of two ways. You can go to a bank and get a mortgage, right? Name a bank. All right, JP Morgan, right? So JP Morgan takes deposits. They have CDs. They can lend out their own money. Name another company that may not be a bank, and they'll name like Rocket or a UWM. And I go, okay, that's great. They don't have their own asset base, right? You can't go to a Rocket branch and deposit money into it. So they need a credit card in order to fund loans, right? So that's how I try to explain it. And then typically after re-explaining it a couple of times, they typically understand. I think I'm still explaining what I do to my dad after.
Nice. That's cool. And then let's talk about the future, like what you're excited about in this industry, because you're dealing with guys like myself in markets throughout the country. You're dealing with people that have business plans, maybe successful balance sheets where you feel good about them being good partners, or you're like, wow, this person has a really cool creative business model. Maybe I'll invest in this new methodology of helping a consumer get a better solution for their needs. What are some of the things you're excited about? Because again, you get to talk with every size company. I'd imagine at events, you're able to see kind of like big or small dollar signs on these potential opportunities, right? You're like, that's a guy I want to stay away from, or that's a lady I want to invest in. So tell me more.
So really right now, this has kind of been my conversation piece for a long time. If you remember back in our industry, for all the conferences that we go to, and the mortgage industry definitely loves a good conference. For years, it's been, let's talk about non-QM, non-qualified lending, bank statement, alternative financing, right? Bank statement, P&L, and everything like that. We talked about that till we were blue in the face. Now we're talking about AI, right? Every industry event that we're going to go to for the foreseeable future is going to be talking about AI, and first funding is no different. And what we're trying to figure out is how to leverage AI with a sense of critical thinking, right? I don't want to rely on AI because there's still things that need to be thought about, right? To enhance the process, speed up the process. I should be able to take a application for someone who wants to get a warehouse line, run an AI formula on it, and tell me what that risk score is going to look like. Okay.
Wow, that's cool. So you're basically taking numbers to determine a behavior of the ability for someone to be a partner of yours. I'd imagine you want to look at some of the personal traits too of the person, if they're a stand-up person, what's their presentation like in the market, that kind of stuff. But that's really amazing.
1,000%. But we have a database, of X number of lenders. Let's call it 1,000 lenders, right? We have a database today of 1,000 lenders. Some of them have performed very well. Some of them have not performed very well. So what are the common traits that are in the financials and everything that we look at amongst the ones that do really well? And if I can credit risk analysis simply, I should theoretically be able to take an application and say, financially, this looks like a good bet, right? Going to your point, the other thing that goes with it is, how are they as a business owner, right? Are they responsive? Are they taking care of the borrower's needs and consumer protection and making sure they have all the right policies and procedures in place? All that is what I talk about with the critical thinking. So we're trying to figure out, and we're on the verge of figuring out how to quickly financially score lenders that come into our arena and give them, a passing grade or a fail grade or a needs improvement grade, however we want to look at it. And then we're going to bring that to our processing side, which is, how do I get them to go from application to producing even faster, right? Making that an even easier process for everyone to get involved with. All that being said, we love the AI side of it. We're all just trying to figure out, our biggest thing is in warehouse financing, there's a lot of repeatable actions, right?
Yep.
How do we leverage AI to eliminate the need for all these repeatable actions that are predictive? That's where we're trying to go right now.
Makes sense. That's awesome. And then obviously, if you think about it from the next level up from your company, you guys have your institutional investors also. So you need to make sure that you're properly allocating your supply of money to those partners that are going to utilize it, right? And I'd imagine it's kind of like a glorified ATM machine. You guys want more transactions that clear quickly because hopefully that creates a more consistent income stream off of the interest, maybe off of fees or transactional expenses. So it makes those targets really look like it's basically you're kind of filtering down the opportunity down to my level in my marketplace where I am to see if I'm a good fit, which is really cool.
Yeah. And it also goes, it's a great segue, something that I was really kind of focused on specifically today, which was there's a buzz in the air about our industry and how rates might be moving lower. And hopefully this purchase market kind of loosens up a little bit. I think we all came into 2025 thinking it was going to be a robust year. It did settle in. It's going to be, by no means has it been a less than average year. It's been a fantastic year for a lot of people. I think once the mortgage rates tend to trend down, hopefully in early 2026, setting up for an incredibly busy spring and summer buy-in season for a lot of people in the business and a lot of people that are looking to finally get out of these homes that, maybe they have outgrown, but they've had an interest rate that they've been tied to for so long. The fact of the matter is that lenders are going to need more capacity, right? And I've been really focused on trying to get our lenders prepared for what that capacity growth looks like. So I've been talking a lot to our lenders about like setting yourself up for future success, making sure that you're getting the proper things in place today so that when the market does turn and Jim, you go from 15 transactions per month to 60 transactions per month, can't replicate you 4 times, right? I need to have systematic approach to that kind of growth because as you know, you and I have both been in this business for a long time. It expands quickly and then it restricts slowly. It expands quickly and it restricts slowly. That's the way that this industry works. So we're just always talking about how I'm very focused on going out to our partners and saying, what are we doing for future growth? Because the last thing we don't want to have happen is 60-day, 90-day transactions. We want to get loans closed in 10 to 15 days or next cycle.
Absolutely. That's a good point. And again, we are always trying to plan ahead. It's almost like a borrower looking to wait to refinance at the right time. You want to be refinance ready. At the same time, companies need to be capital expandable almost yesterday to be ready to scale. And I'd imagine that can also harm your growth if you're not careful. If you don't have the resources in place and can't grow that fast, you might lose recruits. You definitely lose clients or offers on better services and products. And normally when you need something, you can't get it. So it's always good to be ahead of the curve on it.
Yeah, no, I mean, think about it, right? This is I think a real life example that I went through, which is you got a $10 million facility today. You go out and, you bring on an amazing sales team and they bring in $50 million worth of applications and you were not financially prepared to expand at that growth, right? You're stuck. And now you had egg on your face as a business owner. And we really got to be focused on that. It's kind of I'm setting people up for, yes, rates have trended lower recently. We're at the beginning part of September. Hopefully they continue that trend. But I really do think early 2026, we might see some some aggressive rates, and that expansion is going to happen quickly. So
awesome. That's awesome. So if you're someone in my shoes, can you give us like the next few things you would say, Jim, you should do these things to prepare? Because there's we have an audience of a lot of mortgage brokers, a lot of other professionals in real estate. And what would you say things are Like, give me a few things that I would want to be prepared for if I was going to explore the next step in becoming a Bank of Jim Black or a mini correspondent lender with a larger institution.
Yeah, well, the first thing I would say is, and it's been kind of, you're absolutely right earlier. I do talk to a lot of people and I talk to a lot of business owners, and there's kind of like, I don't really trust AI. I'm going to do it the old school way until I figure it out. So first thing that I would say is embrace AI because it is here. And I don't, whether that means you use it for your marketing platform or building out checklists for efficiencies, whatever that means, figure that part of it out, because by the time the rush of volume comes through and you're not ready with systematically, you're going to be too far behind, and you're going to get picked off because people are going to be able to move faster. The next thing that you want to do, if you are interested in moving from that broker to banker space, just reach out to a warehouse facility. First Funding obviously is a great one, but we have a lot of great competitors in this market space as well. Figure out what it takes, because quite honestly, while we do move fast, to get into that space probably takes no less than 60 days, right? To get that.
That's great. Yeah, that's great to know, because people think they can just turn something on, like apply for a credit card, and it's not the case. So
yeah, no, you got to get your licensing in order. You got to get your policies and procedures in order. There's some checklists that you got to do, and it can move fast, depending on motivation, but it doesn't happen in 2 weeks. It definitely takes at least 45 to 60 days from the minute that you say, yes, I want to go. So just get get those ducks in order. And then the last thing that I would say is think back to where your errors were the last cycle. Where did you fail? Right. And I know a lot of LOs. I know exactly what happened with a lot of LOs when they were sitting happy on so many refinances. They really ignored their realtor partners for a very long time. Right. And then we all went back out and said, hey, Mr. and Mrs. Realtor, remember me? I'm back. You got to figure out how to stay engaged with them on a regular, because while if refinances do come back, that's going to be an amazing opportunity for loan officers. Realtors still are going to be challenged with regards to people wanting to move out of their properties, et cetera, et cetera. So just figure out how you want to focus on that. I think that the market is I was talking to somebody the other day, Jim. I think we were at the beginning of another cycle, right? I mean, I really do. I feel I've been doing this since 2000. I've been through 4 or 5 cycles at this point. It feels like we have some not as much headwind as we did earlier this year, and I feel some potential for some movement in the future. We just got to be ready, because you know what, Jim? When we went through I don't know that we're going to have another 2020, 2021. At the end of the day, at 2020, when I look back at it, you know what I think about is how much I worked and how it almost broke me, right?
Yeah,
yeah,
absolutely.
It was almost like, yes, we did great financially, but it almost broke my spirit about the industry, and I don't want to have to go through that again.
Yeah, we have a passion for this, right? You and I have been in this for a few decades, and one thing I say is passion sometimes can get you through the hard times. And yes, sometimes when you're burning midnight oil and you think it's all about the money, it's not. It's about the balance of life and making good decisions. And like our channel is called Know Before You Owe, right? It's all about making whatever decisions you make, whatever aspects of life, get the information before you make the decision, be empowered to make a good decision. And then that way there's no big surprises, and that hopefully it's better than you expect. So that's kind of the way that life works, right? So
I appreciate it, man. So yeah, absolutely.
Cool, man. Well, I'm excited to see the growth of First Funding. I really respect you and Nate and all the other leaders there. And it's great seeing you guys being involved in the community. You guys are engaged always. You guys have always been around. You didn't walk away from the industry when it was tough.
Yep.
You guys have always stayed true to trying to find solutions for partners that you have. And that's what's really cool about having a good partnership with a company is like, you'll know when things are bad, how good of a company you're working with is, right? It's when you're in those tough situations, you see people's true colors, you see people's true tenacity and how they can, their true colors come out. So I appreciate you guys and always being a leader. And I look forward to seeing you again sometime at a football game soon. And I know you got some good dance moves because I've seen them. I've seen them on stage. You know, you got the moves. But I appreciate for being on, Matt. Thank you so much. And I'll make sure everyone out there knows where to find you and First Funding. And thanks again. And let's make it a great 2026. And thanks for all you do.
All right. Appreciate it, bud.
Thanks so much. And if you guys want to follow, like, and subscribe us, know before you owe, we have our next edition coming soon. And thanks again for your time out, and we'll see you soon.